Alrighty, folks, the Santa Claus rally is over. What is it telling us? We are seeing lots of crash and overvaluation calls in the stock market. You've heard Mr. Dan Bird talk about being concerned about the end of January. We have a bunch of jobs data this week. Lots of stuff going on. We got to check in with Mr. Dan Bird. Dan, how you doing?
Good. Happy New Year.
Happy New Year. Thank you for that. Yes. Was it?
2025. Can you believe it?
Yeah, we've been doing this together multiple years now. So
Yeah.
let's do it another year. What the heck?
Hey, what does it mean to make Michael healthy again? How do we
Oh,
do
what
that?
it so I've started a health kick on my every year I try to do something hard. So I'm working with a doctor who's going to work with me all year and the channel on getting healthy. So we've done
Really?
blood work and scans, and he's giving me, things to go by and do. And yeah, Dr. Jeff is making me healthy. I'm down 10 pounds already. I'm down 10 pounds
Wow,
since working with. Yeah.
that's awesome.
Yeah.
Have you seen the special? I think it's not on Netflix. I don't think. I think it's on not Apple. I think it's on Disney Plus from Chris Hemsworth
I haven't.
called Unlimited,
I
and
haven't.
he
I'll
basically
go
he
with that.
basically did the exact same thing that you're doing.
Nice.
He got with a bunch of doctors and they put a program together, and the whole premise was, how can you live longer? How
Yep.
can you get healthy and live longer? So it's only, I think, 6 episodes, but each episode focuses on a different thing.
Nice.
One's on diet, one's on stress, how do you overcome stress, things like
Yeah.
that. Then other little tricks, tips and tricks on how to live longer. And
I
the
will look
very
that up.
last one, which is interesting, they put him in an old folks home,
Okay.
in a retirement community that people were like in their 80s and 90s, and
Sure.
they put him in a suit so he couldn't really move. So I mean, if you know Chris Hemsworth, Thor, right?
Yeah. 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 Big guy. Yeah.
Pretty buff guy. They put them in a suit so he couldn't really move because they wanted to make him feel old, right? And they put
Yeah.
these glasses on so he couldn't see, and he had lunches and dinners with all the elderly people every day, and he would talk to them. And they would talk about their life and what they did, and how they feel now about life and that type of thing. So it made them feel, like them, basically.
Sure.
And then they
Okay.
said, now we have a new person coming in, and we're going to set her with you for dinner. And I want you to introduce her to the community and bring her in for the first time. So they brought this old woman in, to sit down with him. She sat down. He said, at first, I didn't recognize her because she was so old. But as soon as I looked in her eyes, I knew it was my wife. So they took her wife, who was gorgeous, by the way, and they used makeup and everything to make her look like a 90-year-old and set her down with him to have dinner.
Oh, that's funny.
It's very clever, but each episode is just incredible, amazing.
Yeah.
So one of the things that
Okay.
I took from it is now there's one episode about zombie cells,
Okay. Yep.
and how if you fast, you can kill the zombie cells.
Yeah. It's funny you brought that up. I just finished a 3-day fast. That was the first step, and
Yeah.
I
Uh,
lost 6.5 pounds in 3 days.
you'll gain that back real quick, though.
Don't tell
Uh,
me that. You're taking it away from me. I'm just kidding.
Well, as long if you stay on the program, you'll be
Yeah.
fine. But
Yeah. Yeah.
but those 3 pounds will come back pretty quick. But I do that now every month. On the second Tuesday of every month, I do a 2-day fast. But
Okay.
he said it has to be a week. It's got to be 7 days to really kill the zombie cells. And at the end of every episode, he says that. So here's what I took, and here's what I'm going to change now in my life. And he
Yeah.
said, I am going to fast for 3 days because I don't think I can do it for 7. That's too much. The other one that he did was he would go into a cold
Cold plunge.
bath.
Yeah.
Yeah, cold plunge, right? And he actually did it in Norway. He swam across a fjord in
Mm,
Norway. It was full of ice.
mm.
But he took away from that. He says every day after I take a shower, I'm going to turn just the cold water on for 30 seconds at the end of the shower. And they explain all the health benefits of this at the end. The doctors that he's working with come in and they actually explain to him all the health benefits of the things that they put him through the episode. So you should check it out.
Nice.
You probably like
I will look that up. Well, let's get to the stocks. The charts is what people are here for. Let's do the Santa Claus rally. Is a crash coming? All that good stuff.
it. All right. So one comment I want to make about the crash. I was thinking about this, and what I what I've learned is that when everybody else thinks something is going to happen, then something else happens.
Oh, dude, look at that chart. Look at that market bias. That is
Yeah,
a
I know.
downward trend.
Yeah, but look at the very end of it. You see that?
Yeah, 1 point's not a trend, but maybe.
Well, it's not, and it's the same as this one, that and that one right there. However, Friday was the last day of the Santa rally, and the Santa rally was not looking good, by the way.
Was it
Incidentally, if
Friday?
anybody's
Was
interested,
yeah.
breakpointtrading.net is my website. The YouTube channel is right up here in the upper right. I see people all the time on this asking you to put the link
Yeah.
in, and
And
links
folks, I
don't.
try to put the link in. YouTube kills them.
Yeah, links don't work on YouTube. They'll delete it right away.
Yep.
So all you have to do is go to this breakpointtrading.net and click on this. The YouTube channel is right there, and the newsletter is right here in this little box also.
Yep.
So the Santa rally, let's go look at that because it was very interesting. The official dates of the Santa rally are the last 5 days of the year and the first 2 days of the new year. All right, so this, let me make this a little bigger. How's that?
Mm-hmm.
Maybe a little smaller. All right, so this was the first day. This is the day before Christmas. This big bar. So
Yep.
we start counting it from the close of the previous day, which is
Okay.
here, because you see it gapped up the next day,
Mm-hmm.
right? So
Yep.
that's where we start counting it. So we had a nice run up, then sideways, and then 4 days down. Just a brutal 4 day sell off.
Mm-hmm.
And then look what happened on Friday.
Hmm.
That little hook up that you saw on the bias matrix came right back up. And so we're only down for the Santa rally 0.5%,
Okay. Now,
which
what were we
actually
down last year? Do you remember?
last year we were down a full 1%.
Interesting. Okay. All right.
All right. So down a 0.5% is actually better than last year, believe it or not, even though might not feel that way.
Yeah.
But so far it's okay. I mean, it'd be nice if it was higher, but it wasn't. So the second one is the first 5 trading days, which is the first 3 days of next week. We'll complete that.
Okay.
So the first 5 trading days are these two right here, this one and this one.
Mm-hmm.
So we will start the count on this at the close from this previous day right down here.
Right.
All right. So we're already higher right now for the first 5 days, and we'll see if we can continue to go higher. But that's what it looks like right now. If we look at last year, 24, you can see Santa Rally was down a full 1%. First 5 days was down basically flat, I would call it,
Sure.
down 0.13. I think we're going to be higher this time
Oh, really?
than last
Okay.
year. I think we're going to be positive, in other words.
Wow.
And then the full month of January last year was 1.6%. I'm a little concerned about that one.
Hmm.
I think the end of January might actually start the not the crash, but the decline, the pullback.
Would you go as far as a correction? So let's put some numbers on this. I call a correction 10% and a crash 20%.
Definitely not a crash. Won't be 20%. 10% would put us where at about 5,400. That would put us down here.
Okay.
That's possible. And I'm not going to say that by the end of January, but
Okay.
I
But the
will
start of
say
something. It could be a start of
the
something.
start of something, yes.
Okay.
So 5,400 is right there. So that's, make that red. So that's 10% from where
Okay.
basically roughly where we are right now.
So you could see a 10% pullback first quarter of 25.
Um, I I will call it the whole downtrend. Let's put it that way.
Oh, okay. All right. So so it could take longer to get there, is what you're saying.
It could take longer than the end of January to get there. Yeah, longer than end of Q1 to get there. Yeah,
Okay.
I think if it starts in the end of January, it's going to continue probably through the summer.
Oh,
So we're going to have, I think we're going to have a cyclical bear market like we did in 22.
okay.
And if we go back over here to the home page, which is available to anybody without a subscription, by the way, and this is where the subscriptions are at the very bottom. So $0 just registers your email, so you get alerted when the newsletter is available. We don't take a credit card, and we don't sell emails or anything like that. That's just to register your email. Monthly one gives a 7-day free trial, but it doesn't give you everything. And then $99 is for the year. It gives you everything that we're going to look at. But this is on the homepage right here. This is the secular bull market. So this goes back to 1990. Secular bulls and bears I've talked about here many times before, but in general, this goes back 100 years. Secular bulls last about 18 to 20 years. Secular bears last about 12 years.
Right.
All right. The secular bear started in 2000 after the dot-com crash right here. This is where officially it crossed over the red line, which is the 200-week moving average right there. In fact, all of these things cross at the same time, roughly right here in the middle of 2001. But it started a little before then. You can see it started rolling over before then. And then we had 12 years sideways. And yeah, 2009 was the bottom. And you could say that was the start of this secular bull, but you didn't know if it was the end until it broke out.
Right.
So why wouldn't you say, from 2003 to 2008, why wasn't that the secular bull? Well, because it never broke out of the high. So that's why it lasted 12 years, which means if you had bought back here in 2000, it would have taken you to 2013 just to break even.
Yeah.
Okay. So that's the breakout. So officially, that's the secular bull. So it can last 18 to 20 years. So anywhere between 2029 and 2033 is what it should last. But look where we are right now. If I draw this line up across the tops of the 2021, which is the previous all-time high, and then this little downtrend right here is the 2022 bear market.
Right. Yep.
Which is what I think 25 will probably look like. Coming back down to this 200-week moving average. This is a monthly chart, by the way. So each of these bars are monthly. Each one of these is a month. So it takes a while. It takes some time for this to move. So if you look at all the other momentum indicators, right here in 21, that's where we were. That's what it looked like. We're actually a little lower than that right now. So if it is getting ready to start, let's say at the end of January, remember this is a monthly chart, so this isn't really going to finish until the end of January. And if you look at this right here, momentum, where it started to roll over in Q3 of 21, and then it crossed right here in January of 22. We haven't crossed yet, but we're just starting to roll over. You see that? Yep. Both of these. So they're still up there. It's still bullish. And it's not giving any signs yet that it's getting ready to go down. They're just like little indicators, little warning signs, let's call it. Things to watch. Let's call it that.
Yeah,
this doesn't mean this doesn't mean, sell everything and go to cash. This just means be aware, keep your eyes open. Maybe don't take any new positions right now. Just monitor the ones you already have. And then if it does do the same as it did in 22, then we're going to have from January to October, which is how long 22 lasted, until it gets back down here to this red line, back down to the 200-week moving average. So that could take us till October, and same thing down here. So that's the first thing. I'll also show you this chart, which is my long-term trend chart. And this is on the website also. So this is the S&P right here. This one is a weekly. So each of these bars represents one full week. And this down here gives you a long-term trend and a medium-term trend. So the medium term is when you start paying attention and start leaning towards risk off. The long term is when it confirms we're either starting into it, either we are in a downtrend or we're in an uptrend. So you see the long term cross right there, but it had already started the downtrend. Remember 22, January, this would have been May. So if you had waited for that, you would have gone through 3 or 4 months. And if this is what 25 looks like, This, I think it might look similar to this,
Okay.
where we start in January, we go down and then we bounce, but we don't make a new high. And then we go down again and bounce, but we don't make a new high. And then we finally get to the bottom down here in October. That might be similar to what we do here. Now, what you'll notice is when this blue line, which is the medium-term trend down here, crossed at the same time as this red weekly bar crossed the 21-week moving average. That hasn't happened yet. Okay. So that happened in basically the third week of January.
Got it.
In 22. We're not there yet. Okay. And that's when it started. And then it went down, and then it confirmed right there, continued down. That's when the rally started, confirmed back over here. And then we were off to the races, and we haven't looked back since.
Like it. Okay.
All right. So the long term is still pretty solid.
Nice.
So that's what might happen. But I will again emphasize might, because it hasn't happened yet. None of those things have triggered yet.
Okay.
And if we go back to the charts page, one thing that I showed this last time on the index charts right here, this is the monthly image. So this is 21. This is November and December, these two blue ones. This is momentum. So if momentum is higher than the previous month, it's light blue. If it's lower than the previous month, it's dark blue.
Right.
All right. So the 2 months, November and December, we were hitting all-time highs in 21.
Yep.
That was before the 22 bear market. Look where we are right now.
Mm-hmm.
So December, and I showed this in December, and this was actually light blue.
Yeah. Last week it was still light blue. Yeah.
Right. But by the end,
yep,
it had gone down enough to turn it dark blue. So now this one looks like November of 21. So we're basically running about 2 months behind the 22 period.
Okay.
So if this stays dark blue in January, then we've got two in a row.
Then you got validation.
And then you have validation. Right.
Okay. So something to keep watching.
Yeah. Now keep in mind, these are monthly bars. So like December, when we looked at it before, it was light blue, but December hadn't finished yet.
Correct.
So you don't really know what this is going to end up looking like until the month ends.
Correct.
So we could very easily, and I think there are a lot of signs right now that we could have a rally starting next week. Number one, because volume is going to pick back up. Number two, because 401k money is going to start coming in. Number three, a lot of the traders, went to the Hamptons for the holidays, and they're all back, and now they want to start padding their portfolios. So I think we could easily get a rally in the first couple of weeks, and this might turn light blue when that happens.
Right. Okay.
But then we'll have to see what happens by the end of January. And that basically will be the validation, I think, for the rest of the year.
Okay.
I think that will set the stage for the rest of the year.
So pay attention. We'll be meeting every week in January. So we will be watching that together. Okay.
Right.
We do have
and if that happens, going back to the Santa rally, we'll look at that last year's Santa rally. If that happens, then I don't think we're going to get a full month positive.
Yeah.
This time.
Okay. All right.
So just think some things to keep in mind.
Well, we do have a very important economic number next week, the jobs number. We actually get 3 jobs numbers. We get a JOLTS report, job openings. We get ADP, private payroll, Tuesday, Wednesday. And then on Friday, we get the big Bureau of Economic Labor and Statistics.
Yes, exactly. So I'm going to go to the newsletter for this.
And I think expectations are like 157, I think.
Yeah, I'm going to look. Actually, here's next week. I put this every week in the newsletter for those that are interested, along with some cartoons. So this was last week, which really wasn't much.
Nothing weak. ISM on manufacturing was the big number of the week.
Right, it went up a little bit.
Yeah, went up, but still below 50.
Below 50 on this one. This one is a little bit more than 50. Yep. Manufacturing prices. So next week we've got the JOLTS number right here. So projected to go down slightly. Then we've got
private payroll, ADP.
Private payroll, yep. ADP,
yep.
Also down slightly.
Yep.
And then non-farm payrolls down. fairly significantly, actually.
Yeah,
But
most of that's noise because last month,
yeah,
people not remember we had the Boeing strike that reversed.
oh yeah, that's right. Yeah,
Yeah,
right. These numbers, by the way, are for December.
correct.
So I would suspect that there would be a lot of part-time workers in these numbers,
Could be. Yeah,
right?
could be. Unemployment rate stays at 4.2.
Yep. So that's what the projection is. Unemployment rate at 4.2. So let's take a look at the job stuff. Here's unemployment claims.
Yeah, they've been some good numbers lately.
Yep, they've been going down. You can see right here, this red one right here is just very, very slightly higher than the previous week.
Hmm.
These
Yep.
are weekly numbers, so this red box is what it's going to be reported on next Friday.
Yep.
But in general, we had a big, huge spike right there, but in general, it's come down quite a bit.
Yep.
And here's the unemployment rate, the red line right here. So if expectations come in, it's 4.2 right now, then it'll go sideways. And then I should put lower for longer now. But higher for longer basically is this long,
Yeah.
horizontal line right there. That's what that means. When the
Yeah. What are
Fed
you
said we're going
thinking? What are you thinking about a January rate cut?
to, nah,
No chance.
nope,
No chance.
not going to happen.
Nope.
I don't,
Agreed.
I don't think they want to do anything at all for as long as possible.
Now, define long as possible. What do you think? Summer?
I think they would prefer not to do anything through the whole year,
Yes,
but
that's what I've been
but
calling.
but I think that they will cut. I think the next one will be a cut, not a raise.
Okay. All right.
And I think they will have to do at least one and maybe two this year. And mostly because I think the economy in general, some of the signs in the economy will start to falter,
Yeah.
especially in the
Okay.
new administration. There was something that I read last week, which was interesting. And it said that Janet Yellen, when she had to roll over the debt,
Mhm.
she rolled it over with short-term debt.
Yeah, she did. She did not age out the
Right.
rate. It was
Which
far more
adds
short.
liquidity, which adds liquidity
Hmm.
into the economy, which helps the
Sure.
stock market.
Sure.
But the new guy coming in has a very different perspective.
Yes.
And he is likely to roll it over to long-term debt, which is going to take liquidity out of
Yeah.
the economy,
Yeah.
which will hurt stocks.
Yeah. So actually, there's a bunch of Fed presidents speaking. I got my notes here from this morning. I want to make sure I get the right quote. Oh, yeah. Fed President Barkin. Too much uncertainty to factor in President Trump policy in our outlook. They're
Yes,
basically saying
we
we
don't know.
wait.
We have no
I'm on
idea.
record saying they should not have cut last month. They should just have waited.
Right.
So they're going to wait now.
And that's probably true. And everybody can second guess the Fed, of course,
Yeah.
and everybody loves to do that. But they already had signaled, they telegraphed to the market that they were going to cut, so they cut.
Yeah.
Maybe they shouldn't have.
No.
And
Well, they shouldn't have.
frankly, it didn't really, the stock market didn't really take it well.
No.
And it's not so much the cut they didn't take well, it's that they said they may not cut at all next year,
Yeah.
or
Yeah.
maybe just two instead of four.
Yeah. One president came out and said zero. So yeah.
Right. I think that's what they want. I think they want it to be zero.
Yes, I think
But
so too. I think they
but
want
I
zero.
think that there are going to be some signs in the economy that the economy is starting to weaken, that they will
Okay.
probably have to start cutting sometime next year.
Okay.
But I don't think it will be a raise.
Got it. All right.
Um,
Well, there we go. We got lots of
the
stuff to look at
hang
next
on
week.
this. There's another unemployment chart that I created,
Oh, nice. More charts.
which shows the initial claims versus continuing claims.
Yeah, that's a good one.
All right, so continuing claims is in red back here, and initial claims are in blue. So initial claims are climbing, while continuing claims are flat, basically, slightly down.
Yeah.
So
Okay.
if the blue one goes above the red one, meaning there's more initial claims than there are continuing claims that eventually will turn into continuing claims,
Hmm.
right? So that's what pushes this whole thing up. So, I mean, yeah, you don't want continuing claims to keep going higher.
Yeah, we hit so 2 weeks ago we hit a peak for the year at 1.91 million. Last week it came down to 1.84 million. Yeah,
Yeah,
we got to watch this. If it hits over 2, it could get to 3 million really, really fast, and that would be a problem.
right. Yeah. And down here is actually see them both together. So you see continuing claims is not as volatile as initial claims,
Right.
but the trend is up. And then
Yeah,
initial,
a lot of Fed presidents are talking about that. Again, we have a lot of Fed presidents talking since they've had their meeting. Fed President Daly, there's increased trade-off between inflation and the job market.
right. Yeah.
And
And that I think, and I've said before, I think that is going to be the key for their next cut
yep.
will be the job market.
Yeah, and I think Fed President Kugler, I think that's how you say it, is said it more succinctly. We are moderately restrictive. We want to maintain our current unemployment rate. So unemployment rate
Okay.
goes up, you get your cut.
Exactly. That's right.
Yep.
And Powell said a couple of meetings ago, 4.4 was his target for the
And what are we,
unemployment rate.
4.2 today, I
We're
think?
at 4.2 right now. We'll see what happens on Friday.
Right.
But if that goes up to 4.3, I still don't think it's enough to start a cutting cycle again, but it
Okay.
may spook the market. And oh, by the way, I almost forgot about this. I'll show you what January looks like historically.
Oh, kind of a kind of a
So we are
terrible
here,
month.
right? We're right here. CPI report on the 15th.
Yeah.
So we'll talk about that next week when we
Yeah. Oh,
talk.
I got one more for you. I actually chuckled when I read this morning. This came from Fed President Barkin. The base effect should bring inflation down in the coming months. I'm like,
He's
Dan
reading my
Bird said that.
newsletter. He's reading
Yes.
my newsletter.
Yes.
I have to go look at my subscriptions and see if he's
See,
on there.
see if Fed President Barkin's on there.
Yeah,
Yeah, I
that's what
chuckled.
I've been saying. But it may not be this one, by the way.
No, it's the next two. Yeah.
Yeah, it
Next
may
two or
not be
three.
this one. So this one might be a little dicey.
Yes,
So
correct.
there are some questions through here. So if you look at this chart, this comes from Stock Traders Almanac, who does extensive historical research on the market. And the dotted lines here are post-election year,
Mhm.
going back to 1950. All right, so post-election year, the year after the election is usually a pretty good year for the market.
Mhm.
But normally it's this one down here, just kind of going sideways, kind of choppy all the way
Right.
through January. So because we're in a post-election year, it might actually help
Yeah.
us. But I think there are some things coming up that are going to be that the market is going to be too uncertain about.
Hmm.
Inflation is one. The Fed meeting is at the very end of the month,
Yeah.
the 29th. And then you've got the inauguration
Yep.
happening on MLK holiday, a day off,
Oh,
by the way.
I didn't know that. Okay.
So the inauguration is actually, everybody will be off that day.
Oh, there we go. Okay.
And the market will be closed that day. So if not to say that something will, but if something, dramatic happens on
Come on.
inauguration,
We're not going to put none of that juju. We're not putting any of that juju out there.
right?
Not happening.
Um, the market won't react until the next day
Of
because it
course.
won't
Yeah.
because it won't be
Well,
open.
yeah.
So
Won't be open. Okay. All right.
so
Well, yeah.
keep
It's going to be an interesting week for sure, or interesting month.
yeah, absolutely.
Very, very
So
cool.
we'll see. I mean, I think there's a lot of uncertainty. I think we might have a reaction rally next week, next couple
Okay.
of weeks, maybe.
All right.
Then it's going to get dicey when we get around this inflation number,
Mhm.
options expiration, inauguration, Fed meeting, the last 2 weeks of January. I think there's a lot of uncertainty going to be in the market during this period.
Okay.
So I wouldn't be taking any new positions after that time. If you're a trader, you could, maybe take advantage of the reaction rally.
Right.
But this is not advice, by the way. I'm not a financial
Yeah.
advisor.
Looking at a
Um,
chart.
right. So we'll see what happens. But if those other things that I showed you before start, I think they probably are going to start during this period right here, the end
All
of
right.
January.
Well, again, we will be meeting each and every week to stay up to date with what's coming. We'll talk about CPI next week. Show your website one more time so they can subscribe or get the newsletter.
Sure. It is breakpointtrading.net. Right there, the newsletter is right here, this little button. And the
Yep.
YouTube channel is right up here. I'll take you straight to it. I try to do one every day, 30, 45 minutes, something like that, depending on the
Wow.
topic.
Very nice.
Yeah,
How's it going?
sometimes
How many subscribers now?
six, actually, interestingly enough, this is pretty
Uh-oh.
funny, actually. Let me show you. Let me show you my thumbnail real quick of what I did a couple of times ago. There's my thumbnail,
Yeah. Okay.
The Ghost of the Bear of 2022. That was on
Right.
January 2nd.
Uh-huh.
So when I posted this and it was running, so I have it set to start at 7 p.m. Eastern time.
Sure.
So as it was running, somebody accurately said that, oh my God, you've got this thumbnail up and there's 666 subscribers. 666, and it stayed that way through that whole night. It stayed at 666, and people were saying, "Would somebody please subscribe? Get us off of this number."
Oh, that's funny. So
But
you're off that number.
yeah, I think I'm like 675, something like that.
Nice. Folks, let's try to get him to 700. Show him some love. He comes back here for years now. Let's get him over 700. That would be amazing. Dan, thank you so much.
All right, have a great weekend.
You too.
Take care.